as certified financial planners, we are fiduciaries, and advisors have, been given the okay to largely ignore the best performing asset of the last 14 years. And I don't think that you can confidently call yourself a fiduciary by doing that. And that is an explosive statement, and I am not meaning that to be disrespectful, but I think it's pretty black and white. Like, you have to have some sort of educated opinion on this thing.
Welcome, Model FAs. David DeSalle here, president of Model FA and your host of the Model FA podcast. And I am joined today by two guests. And before I introduce them, I want to introduce not only how we came across each other, but also the topic in which we're going to be unpacking today. And I want to share how we came across each other because it just goes to show that if you want to do something, you just kind of have to ask for it. And also I want to invite other people to do the same. So Trent and Isaiah actually went out of their way to email me and ask to be on the show. They noticed that we had a prior episode about crypto on the show and said, hey, we also play in that space and focus on the adoption of crypto, specifically Bitcoin, within the overall context of a financial plan. And we think we could shed some additional light on that particular topic. So they just reached out and asked. So if you or someone you know could be a good guest for the show, I would invite you to just shoot me a quick email at david@modelfa.com, and happy to do an intro call and see if it makes sense to have you join. So today we are going to be talking about Bitcoin specifically and how we can integrate and why we should integrate Bitcoin into a client's portfolio. And kind of like I did in the last show where we talked about crypto, I'm going to be asking all the silly, simple, dumb questions because I don't know a ton about the space. Those of you listening, maybe you do know a ton, maybe you don't. So hopefully this, is helpful to all of you to shed some light. But with that being said, we have Trent Dudenhoeffer, who is a CFP practitioner. He started his career as a financial planner at LPL Financial, left in 2021 and joined Watchdog Capital, where now he's focused on the convergence of Bitcoin and traditional finance. And then we have Isaiah Douglas, who's a CFP as well, and is a partner at Vincere Wealth. And he got his career started at Merrill Lynch back in 2015. So with that said, Trent, Isaiah, welcome to the show.
Thanks for having us.
Thanks, David. It's great to be here. Yeah, I'm really glad that I reached out and asked. It's crazy the things that you can get whenever you just ask someone for it.
Well, whether it's that or whether it's referrals from clients, like there's a saying that's always stuck with me. Yeah, you have not because you ask not. So if you just ask for the things that you want, you tend to be pleasantly surprised with what the results end up being. But I guess Trent, I'll start with you. What got you into, I guess I'll start with the crypto umbrella. I know you mentioned in our intro call that, maybe not crypto, but Bitcoin specifically. So maybe help with that discernment as well. So like what got you interested in this space? And then talk to me about the difference between crypto in general and then Bitcoin specifically.
Sure. Yeah. So my dad actually was the first person that mentioned Bitcoin to me, which is like typically reverse. Typically it's a younger person.
That's backwards.
Yeah, talking to their like boomer parent or even their grandparent in some instances. But back in 2016, he actually sent me a portion of a Bitcoin, and I was just a broke college kid at the time. But he said, this is your first portion of a Bitcoin. I have a feeling you will never sell it. And 7 years later, that has held true. Don't really have any plans to sell it right now. But what got me interested in Bitcoin was probably crypto. And now it's the total opposite. I have no interest in crypto and I have all the interest in Bitcoin. But you just hear about all of these different use cases for crypto and blockchain and NFTs and things like that. And it's overwhelming, right? until you kind of do some more digging and then realize that it's all a pipe dream in a lot of instances. And even more so, if it is beneficial, it can be produced on Bitcoin. So I don't want to get too far in the weeds right off the bat, but yeah, that's sort of how my dad and I were like closer now than ever, that we have this bond with Bitcoin, and we see like how much it's changed our own lives. And so I'm really, really grateful for that. But yeah.
And do you know, how did he get exposed to it in the first
Yeah.
place?
Well, my dad, he works at a bank, and he has always been very interested in like the latest financial trends. He's always been trading stocks. He's always been watching Jim Cramer, like ever since I've, been able to process what was going on. It's
Does
always
he invest in the inverse Jim Cramer?
no, I need to get him on that though.
He'd be
He would have made
retired
a
if he did.
Yeah, he would have made a lot of money. But yeah, so he had me buy my first stock when I was in fourth grade. I
Oh,
bought a share
cool.
of Google at $408 while I was in the fourth grade. Held it through high school and then sold it. And with the profits, I was able to buy my laptop for college. So he has always been in the know with financial instruments and investments and stuff like that. And it was just a newsletter that he kept reading and reading and reading months in advance before he told me about it. And then I guess he decided to, bite the bullet and tell me to buy some.
Nice. Awesome. Isaiah, what's your backstory about getting into the space?
Yeah, so you mentioned in the intro, I was at Merrill Lynch when I think a lot of people probably initially heard about Bitcoin. So I kind of think about Bitcoin going through different stages. And early on, it was a lot of people that were, let's call them, the nerds that take it from the tech side. And that was not from my perspective where I came to Bitcoin from. But in 2017, the first real big run up that I think people paid attention to, broad, folks had Coinbase accounts. There was a little bit more access versus, when Bitcoin had big runs in the past. But 2017, it was, the marching orders at Merrill. Hey, tell clients not to buy it. It's a scam. It's tulips. It's fake money. And then when it crashed, right, it's look at us. We're so smart. You avoided this because we told you not to. But when it didn't die, when this thing that everyone said was going to die, stuck around, I got interested. And so 2019 was kind of the first time I think I spent any legitimate time looking for myself versus just adopting someone else's opinion. And then 2020 really solidified that for me. So one other thing, though, to piggyback on what Trent talked about earlier, the difference between Bitcoin and crypto, I think there's two distinct things. The first is most crypto is what I would call a dino. So dino being a little joke about dinosaurs and going extinct. So if you look at, Bitcoin versus all these other, 20,000 different assets, most of them trend towards zero when measured in Bitcoin terms. So it's pretty interesting, right? You can just look at, hey, what is the market telling us if we believe in market efficiency? And then Dino also being decentralized in name only, because most of these are backed by VCs. These are backed by a founder. They have an office. And that's kind of goofy because if it's this decentralized thing, yet you're running it on AWS servers and you have a team and you have a marketing, you have a founder and you have investors, that doesn't sound too decentralized to me. That sounds like a startup in an unregistered security. And so the way that Trent and I think a lot of people that dig into this space start looking at it and saying, Bitcoin is very, very different. So like it needs to be positioned in its own spot. I think Trent and I would both tell you there's money to be made in crypto. We just don't feel like it's worthwhile for advisors to play in that space unless they have a lot of inside knowledge. And I think it gets into a very gray area that I personally wouldn't be comfortable with. And I wouldn't advise anyone else to. So it just makes it a lot easier to delineate between crypto and Bitcoin.
And that, I guess that's where one of my first questions lie is from the outside looking in, not knowing a ton about the space. I feel like a lot of people, who quote unquote make it big in crypto that are, in high school, college, where, there's just like there was a tip that was shared because they spent so much time on these, forums or discords or, wherever that information is being shared. And, I would find that like when I would get involved in that or be curious about it, like I was always like one step behind where I'm like, oh, I missed that, or, put some money in and it went in the opposite direction. So I think that a lot of the resistance with advisors, and I'm assuming here, so I could be wrong, but I feel like a lot of the resistance with advisors is just the unpredictable nature of this asset class, and not necessarily wanting to encourage a client to put their money in these various asset classes, because maybe they're not as predictable as what the advisor is used to talking about, like, the companies within the S&P and, wherever else they're having them allocate their funds. So how do you, if I'm an advisor listening to this and I'm saying, this is just too unpredictable for me, like, how do you calm me down a little bit and see what the opportunity actually is?
Can we divide that question into what makes Bitcoin unpredictable and then what makes crypto what makes Bitcoin predictable and crypto very unpredictable? Because I think that's another good delineation between the two. And that's
Like I said, I'm going to be asking the stupid question. So if you have a better way to frame my
Yeah.
question, by all means, I'm open to
Hey,
suggestions.
Yeah, Trent.
this is a brand new technology. There's no such thing as a stupid question.
Trent, do
Go
you want
ahead.
to take the crypto side or what makes Bitcoin? And what I would say, David, is Bitcoin is the most reliable, consistent thing that an advisor can put money for a client in, both themselves personally and clients, where you can have, a consistency that is very rare anywhere else. Because if you look at what Bitcoin is a rule set that was dictated in 2009 by an anonymous founder, he, she, they, them group of people we don't know, right? So Satoshi Nakamoto. And there was kind of these fundamental truths that have not changed, right? 21 million blocks that come in every 10 minutes, and the ability for you to transact without the ability for it to be censored. And so there's these core tenets of Bitcoin that have not changed. There's been, upgrades that have happened to Bitcoin over time to say, hey, maybe we make an adjustment here or there, but it is a consensus protocol, which means if one person wants to make a change, they can't. No one controls Bitcoin. It is, fundamentally freedom money, right? Like it is this idea that it is completely for the people, by the people. So it has a lot of American values, which Trent's actually written some articles and some content on that. And I think it's great, where for the first time ever, you actually have really good predictability in what happens. And so Bitcoin's supply issuance has never changed. That's been the exact same. So you can have conviction in knowing, hey, if I own a certain amount of Bitcoin, I'm not going to get diluted. I don't know if I own Google shares, if they issue more shares tomorrow, in 6 years, or in 10 years, right? In the same way for a company, and if I own debt in a company, are they going to issue more debt? Are they going to have bad earnings? They can have these different things, where Bitcoin actually is much more predictable because it's done exactly what it said it's going to do for going on 14 years. And so that's where I think it's very, very different. And I know that that's a bridge that's a little far for a lot of people. Like, well, and that's where I think you have to go back to understand what the heck actually is Bitcoin versus just saying hey, look at this screen. If you would have allocated 5% to Bitcoin, number go up, money for everyone, life is good. And I think sometimes I'll say, I can be guilty of that, right? Like you have to go back to the beginning, but what captures people's attention, David, is number go up, right? That's when everyone gets excited. Hey, I can make some money on this thing. Like, why do I want to own it? It's like, yeah, great. That is an important part of it. And that does drive interest. But I think you have to start fundamentally with what it is, how it operates, and then from there build up. And I think for a lot of advisors, we're busy. We have lots of other responsibilities, and it takes a little bit of time to get there. But that's what I would say. It is extremely predictable, and you don't feel like there's a bunch of changes or things that are going on. Now the ecosystem around it can change, right? The people that interact with it can change, but the protocol itself and what Bitcoin is, the network, it hasn't changed.
So you hit on the predictable side. Trent, what about crypto in general? As Isaiah reframed the question, is unpredictable.
Yeah, so let's just compare the broader crypto space to Bitcoin. And Isaiah did a really great job there talking about Bitcoin's monetary policy, its supply issuance. It has literally never changed in the 14 years that it's been around. If you take a look at the second largest crypto, which is Ethereum, they have had at least a dozen different large-scale modifications to the supply issuance, to the monetary supply, our monetary policy. Isaiah mentioned there will never be more than 21 million Bitcoin. That is in the source code. You can verify that for yourself. You can run your own node at home, which is like a $300 computer or an old laptop where you can run that exact code yourself and you can verify it for yourself. You don't have to rely on anybody else. Ethereum, on the other hand, that, like I said, they've changed their monetary policy at least a dozen times, and you cannot verify how many Ethereum are out there right now, out in circulation, or how many will be. And it's funny because Ethereum, they were an inflationary token, meaning there would be continuously be more Ethereum as the years go on. And since then, they have changed within the last 6 months, 8 months. They turn into a deflationary currency, which means that the supply is shrinking over time. And that was instituted largely by the ringleaders of Ethereum, the lead developers, Vitalik, etc. And so, and now they'll claim that since there's less Ethereum, that means that your Ethereum that you hold is going to be worth more, which makes Ethereum ultrasound money. And that is just a total lie, in my opinion, and many other Bitcoiners' opinion. Something that what makes ultrasound money is not a decreasing supply. Like the dollar has been decreasing in its supply in the last 8 months or so, with the Federal Reserve winding down its balance sheet, et cetera. Does that make the US dollar ultrasound money? Most would argue no. So what we would argue is that a sound monetary policy that is never going to change, regardless if Michael Saylor, who probably owns more Bitcoin than anybody, if he wants it different, he has no outsized say than I do, a small shrimp here in Kansas City. So that's what makes Bitcoin beautiful, and what makes it different from other cryptos is that it's never going to change. You know that the narrative is never going to change. What brought people into Ethereum 5 years ago was DeFi. 3 years ago, it was NFTs. Now it's Web3, and like you haven't seen any real development between any of those subsectors. It's just like changing the narrative repeatedly. But Bitcoin, it's just money. It's just sound money, and there is a huge appetite for that.
And I would just build on one of the big things that also happened with Ethereum is it moved from something called proof of work to proof of stake. And I think that's massive, because going back to the control mechanism today in the current monetary system that we have, if you have, $100 million and I have $10,000, you can have a little bit more sway on things. So you have access to a few different, people and deals and all these different things. But going back to what Trent talked about, so Michael Saylor, CEO of MicroStrategy, first company to really put Bitcoin on the balance sheet, made a lot of noise. Some people love him, other people hate him. Some people love to hate him. So it's kind of a funny thing. If you're on FinTwit, you get to see that. But proof of work is just the ability for new Bitcoin to be issued. So you have to spend real world energy to create that. So you can't spoof and just spin up and create more. And that's how you can have, and this is an oversimplification of a more detailed topic, but that's how you can have a consistent and adhered to monetary policy versus if it's proof of stake, it's, hey, if I have 1,000 Ethereum and Trent has one, guess whose vote counts more? It's Isaiah's, right? And that's just recreating the current system. And that changes and kind of bastardizes a lot of this claim to be decentralized, because then what happens is you start to see more centralization of those tokens, and then that just gets power to these entities to then dictate and control what they want to control, which kind of sounds like a lot of the current system. And that to me is a really, really big change, where a lot of people will push back and encourage Ethereum. So I want to understand and play both sides, right? Like from a crypto perspective, I've never said that you can't make more money or make some money in Ethereum. I've never said that. But what I will say, and what I think is truth, and is if you measure Ethereum in Bitcoin terms, back to when Ethereum launched, it has never made a new all-time high versus its all-time high it made in 2008. And so, if you like to look at facts and reality, whatever hype is presented from the Ethereum Foundation or people that are there, yes, the idea of programmable money can happen on Bitcoin and has happened. And it's just a slower adoption cycle, where the move fast and break things VC style is much more on Ethereum, which I think appeals to a lot of investors, right? Like the tech break things, move fast, like do all this stuff. That's kind of what companies typically do. And that's what has been rewarded over the last, call it decade to 15 years. And so when people hear that narrative, it's really appealing, where Bitcoin is boring and old and it doesn't do anything, and there's only 21 million and it's slow and it can't do, like, a lot of that noise or those complaints, they've been addressed, and it's just been a little bit, I think, quieter from what it's trying to do.
So what if I listen to that and I say, okay, cool, sounds good, right? I agree. And then I have another concern of, does regulation, like federal regulation, play a role in terms of long-term risk? Like, I don't know if this is possible, not likely or not, but like, what if the United States government all of a sudden says, you know what, we're not going to allow anyone to utilize Bitcoin in any way, shape, or form? Help me understand that conversation.
Yeah. Let's also split that one. Let's take it from like just the real world. And then Isaiah, how about you focus primarily on like regulation as it pertains to Bitcoin and like an RIA?
Sure.
So yeah, if the United States wanted to say no more Bitcoin because Bitcoin is a threat to the US dollar, it's a threat to all fiat currencies, etc., uh, that is number one, a possibility, and two, a big deal. Like I'm definitely not going to sugarcoat it. That would be tough. But then you have to kind of take a step back and say, well, what happens after that, right? So if a large amount of people believe that Bitcoin is this new innovative technology that can make civilization better, that would be a really big mistake to completely ban it within your borders, not let any of your entrepreneurs that want to create capital and create jobs, not to let them flourish, and to just, kick yourself out of a technology like this. And then you have to go from the adversarial point of view, and you have to say, well, if the US bans it, would China ban it? Would Russia ban it? Probably not. If this technology does have any salt to its name, or whatever the saying is, if this tech is legit, the odds of another country banning it rather than embracing it is extremely low. So then at that point, Bitcoin, in allowing it to flourish, sort of becomes like a national security topic to discuss. Like, if this is what's going to be the primary means of money, or even a store of value, if it's just a popular store of value, you can't really cut your citizens off from that without major effects down the road. So it's not, to boil this down, it's not in the United States' best interest to institute any sort of ban like that. It might be in the short term to save the dollar, but in the long term, you're really just shooting yourself in the foot. And that's game theory. That's really what it comes down to, is game theory and Nash equilibrium. You have to look at the second and third order effects of things.
I would answer that with, it would legitimize the asset as being a threat. When people have said like Bitcoin's worthless, if you ban it, you're telling everyone and signaling that, hey, actually this has merit and it's something that could destabilize or do something to and it hurt. And so can they do it? Absolutely. 6102 was when gold was banned in the United States. FDR did that. Is gold ownership still happening in the United States? Yes. Did people still own gold during that? Yes. They just didn't talk about it. They held on to it. And then when that was changed, gold came back. But one of the big
and
things
and those gold holders were rewarded too, because right after they confiscated all the gold, Executive Order 6102 back in 1933 or 34, they repriced gold in dollar terms, devalued dollars 41% overnight. So sorry to interrupt.
No, that's good. I didn't have the stat on that, but I knew that, if you held the gold and went through it. And so I would tell you, like, are Trent and I advocating for, hey, you should tell the government to piss off, right? Like, no, like that's not what we're trying to say. But, the SEC is head by Gary Gensler today, and he's done, classes on crypto and Bitcoin, and it's a commodity. He said that verbatim in recorded sessions, that is the case. They've reiterated that since.
That
And
Bitcoin.
that Bitcoin is crypto. I mean, you're starting to see a little bit of a, they're starting to clamp down a little bit, where you're seeing some people that, in the run up in 2021 on these different unregulated securities, right? Hashtag, crypto. There are people getting lawsuits. A lot of celebrities have been hit with stuff. I think Kim Kardashian got hit with one, and other people, a couple $100,000 fine here and there. But the other thing that's also important to understand about the United States, which I think is unique, is that we have states' rights. And there's going to be certain states that are going to push back. Texas being a great example of that, where, they have said, we want to be the Bitcoin mining capital of the world. Now we can go back and forth if that's good or bad. It's created jobs, and it gives them security from that standpoint, where you're able to grow. And so if you have states that all of a sudden over here are attracting population, mining Bitcoin, seeing their economy flourish, and this other state over here saying, well, we want those jobs. We want those people. We want to do that. So how do we attract those people? And if I'm friendly to this asset class that the people want, ultimately, the people are going to decide. And you're also, I'll finish it with this. There's 3 2024 presidential candidates that have talked about Bitcoin favorably. And I think that is wild if we would rewind back, right? And, who would have thought that? RFK Jr. was at Bitcoin 2023. You've heard Ron DeSantis say that he would allow individuals to do Bitcoin, which I don't know what the heck that means, but we're going to be able to do Bitcoin, David. Like that's important. And then I cannot think of the name of the other candidate.
Like Vivek.
Yeah, Vivek. Thank you. I was like, I'm drawing a blank. I know there's a third.
He was also at Bitcoin 2023.
Yeah. And some people might hear that and they say, hey, Isaiah, well, I'm not a Republican. I don't agree with DeSantis or other. Bitcoin is apolitical, right? Math code just does what it does. And there are folks across the aisle that both agree with that. And I don't think it needs to, and I don't think it should be positioned as this is an asset only for insert whatever political agenda you have. That's not the goal of it. And I think that's a bad way to put it. And if that's ever done, I think you just push back on that hard to people, because it does truly just accomplish a lot of things. And it's not trying to, be a conservative or a liberal thing. And it's got characteristics of both.
So to simplify the conversation that we've had so far, right? If we think of Bitcoin, and granted, Bitcoin since inception has had an unbelievable run up, and I feel like it's just kind of, we're recording this on June 1st, and it kind of fluctuates, in this little area right now. My hand's waving up for those listening to the audio, but it's not like it's gone up to 200,000 per Bitcoin, whereas be it NFTs, meme coins, things like that have had like massive run-ups, but have also crawled all the way back to near zero, if not zero. Is it a safe comparison? And again, I said I would simplify this, so don't laugh, but is it sort of like a tortoise and the hare scenario where Bitcoin may not have those explosions of growth like some of these others will, but at the end, you believe that Bitcoin will win?
Yes, Bitcoin wins.
Yeah, Bitcoin definitely
that way. To simplify it, the return, Bitcoin is so small still, right? So it's, depending on the day, it's probably 550 billion, maybe 600 billion. And if we think about like Apple stock is, north of 2 trillion. So just to understand the size of what Bitcoin is today, it's so small. And if you think about the TAM, right, total addressable market, VCs love that stuff. And I know I kind of bashed on VCs earlier, but let's just think of as an investor, total addressable market. The total addressable market for good money around the world, because not everyone is fortunate like we are to be in the United States with a really good currency. Even if we want to bash on the dollar later, we can do that, right? But let's say like we are very blessed and fortunate to be here. And so the ability of every single person to interact with Bitcoin, because it is money, is literally every human on the planet. So that total addressable market is massive. And if you look at all the assets in the world, right, and let's look at real estate, let's look at fine art, gold, crypto, XBC, BTC, real estate, bonds, stocks, all this, right? 900 trillion. So Bitcoin is a sponge. It's going to soak up some of that. Today it's 550 billion, and then we got 900 trillion. So tortoise or hare, I think Bitcoin, and I know that, people say moon boys all the time and as a negative, Bitcoin can still do a lot of stuff, right? Like the returns on Bitcoin, I think are still so early. You haven't missed the boat. I think that's the biggest thing that I would try to drive home is Bitcoin goes through these different cycles. So every 4 years, Bitcoin's supply issuance gets cut in half. So that halving cycle, and Trent and I have different opinions on this, but I'm gonna talk about it a little bit, where he is much more bullish that this halving that happens in 2024 will push the price up a lot higher. I'm like, I don't know, we'll see, because I think people are too smart now. But then the more I talk to people, I'm like, I don't think so. Maybe I'm changing my mind. Mm-hmm. But if you look at Bitcoin and you put it in a log scale on a price chart, it looks like it just does a little loop, and it goes up and then it comes back down, but it doesn't come back down all the way, right? It kind of hits a low point, then it comes back, but it's making higher highs. So for anyone that likes, technical analysis, you look at that and you're like, it's a really freaking beautiful chart. I'm not one of those folks. I don't do a lot of charting, but if you look at that, it looks programmatic and systematic. And that's what Bitcoin is, right? Every 4 years it gets cut in half. And if the demand keeps growing, and because Bitcoin is an open monetary ledger, you can see on chain the activity. The activity is continuing to grow. more growth, less supply and demand. Let's keep it simple, right? What happens? The only way to reflect that's in the price. So if you look at historically these halving events, it's been 100x, it's been like a 30x, and it's been an 8x. This only happened 3 times. So it's hard to take that because that's a pretty small sample size. So if Bitcoin does, let's say, a 4 to 8x, and I hate talking price, but I'm going to right here because I think it's bigger than that. I think Bitcoin has returns. So Bitcoin today is at, we'll call it 27,500, probably around that, somewhere in the 27s as we're recording this. If it does a 4 to 8x, that goes somewhere between 120 and 240. Is that enough to justify, hey, I want to have a position in that? And that probably occurs somewhere in May to October in 2025. That's a pretty darn solid return in a short amount of time.
I don't disagree with that, but let me ask a clarifying question because I became confused a moment ago. Earlier in the conversation, we talked about how Bitcoin has a supply of 21 million, and then you talked about halving every 4 years or whatever the time frame was. There's a disconnect there for me. Help me understand that.
The way that new Bitcoin is issued, so going back to that idea of proof of work. So the only way for new Bitcoin to be issued is by someone mining Bitcoin. So supporting the network and helping transactions get confirmed, and so that you can actually send money. So David, you and I could send you Bitcoin. The miners are going to process that transaction. We're going to pay them for their efforts, right? And that's going to be able to send that money to you. And so that way we don't have to trust a third party. We're able to just use that by opting in. And so the way that those miners are paid, because they plug into electricity, they have to buy machines, and they pay those bills right now in dollars, but they have real world expenses. So why are they incentivized to plug those machines in? Well, it's because their rewards are new Bitcoin. And that's the only way that new Bitcoin is able to be issued, is if you are a Bitcoin miner, you solve a block, you earn that reward, you process those transactions, and you get paid. And so when Bitcoin first started, it was 50 Bitcoin every 10 minutes. That was the supply issuance. Then it got cut in half. So the halving, so it went to 25. And that's how you have that scarcity built in. So it's programmatic over time. Does that help?
So that makes sense. So it's the halving is for new supply, and then at some point in time, we'll hit the 21 million total, but the 21 million isn't entirely issued right now today.
To give some context, so the estimation of when all Bitcoin will be issued is 2140. So it's a little ways away. But the interesting thing is 92% of all the supply will be issued at that halving. So a lot of the Bitcoin that will ever be in existence is really already in the marketplace today. And so going back to that demand thing, if the demand of all these people in the small asset class is already out there, and more people want to come into the space, right? Like the only way to reflect that is within that price. And that's where, going back to your initial question, like, hey, NFTs pop, instead of the cryptos pop, Bitcoin still could do, marvelous from a return perspective. I don't think that's the right picture to paint if I'm an advisor to clients, like, hey, just wait, this thing's going to moon. I think it's trying to say, like, this asset fits really well, complementing, your traditional stocks and bonds. And we can talk about some of those other things there. But yes, the performance has been fantastic. I think it's hard to know exactly what happens, but a compound annual growth rate in Bitcoin of 30 or 40% over the next decade is absolutely doable. And I think that sounds ridiculous to say. If you talk about that to someone, you're like, 30 to 40%, like that's the best hedge fund managers in the world are doing that. And you can do this by saving into better money and letting the monetization process and the adoption of an asset happen. And I think that's the thing that, when Trent and I talk about, like, this is really important for advisors to get for their clients, because we want everyday folks to understand what Bitcoin is and have better advice and guidance given to them from their, trusted relationship in an advisor. That is powerful versus, a Michael Saylor, the CEO of this huge company, being able to have a bunch more Bitcoin. And I think that there's a real opportunity for a lot of advisors to allow clients to have a little bit of exposure to this. It doesn't have to be an all-in type of thing.
So we've talked about crypto in general, Bitcoin. I feel like I have a better understanding around it. How does this fit in the financial plan? So Trent, and I know you guys both focus on this, but Trent, in your bio, when I read it, it says that you're focused on the convergence of Bitcoin and traditional finance. So if I'm an advisor and I'm like, I can see the value proposition here and why this makes sense, how do I have this conversation with clients? How do I integrate this into their portfolio? Like, what does that look like?
Yeah, that's a loaded question because it is difficult. Like I'm not gonna sit up here and sugarcoat it. When you are dipping your toes into crypto, you're learning about Bitcoin and you're learning about everything else. And then you got to learn about NFTs and then DeFi and all this stuff. It's like drinking from a fire hose. And I totally understand that. And advisors, they have to know a lot about estate planning and tax planning and the new rules around 401ks. And for some reason, we have to know a lot about healthcare. Like it's just so much stuff. And I understand that it takes a lot of time to just keep up with that and, add a brand new asset class on top of that. And so that's one reason why Isaiah and I specifically focus on Bitcoin. It's because, yes, we think that all the crypto stuff is just straight up noise and can largely be ignored. But Bitcoin is the innovation here. Bitcoin is what's important. So you can just cut down a bunch of time right there by just focusing on Bitcoin and just educating your clients on Bitcoin as well. And that is a journey, and we're not up here saying that you have to drag every client into a Bitcoin position, because if they don't know what it is, when we do see a bear market like we're in right now, they're going to want to sell it, and they will be selling it at 75%, 60% from what they bought it at. So that's not what we're advocating at all. But as certified financial planners, we are fiduciaries, and advisors have, been given the okay to largely ignore the best performing asset class of the best performing asset of the last 14 years. And I don't think that you can confidently call yourself a fiduciary by doing that. And that is an explosive statement. And I am not meaning that to be disrespectful, but, I think it's pretty black and white. Like you have to have some sort of educated opinion on this thing. It can't be, oh, it's a scam. I don't really know why, but that's just what I heard on the news. If you can tell me why you disagree with our thesis on Bitcoin and you can do so from an educated standpoint, then yeah, that's fine. You've done your homework. But so many people aren't doing their homework. And then when you get into the conversation of actually including it into your portfolio, there's a couple of different ways to do that. But one of the beautiful things about Bitcoin is that you can own it with zero counterparty risk. That means you don't have to worry about a Silvergate bank going under. You don't have to worry about a First Republic. You don't have to worry about, Google botching AI or whatever else it is. You don't have to rely on an exchange for Bitcoin either if you take self-custody. It is a bearer asset that is the easiest bearer asset to self-custody that humanity has ever seen. So that means that you don't have to rely on anybody else to custody it for you. That is the best way to own Bitcoin. There are other, what I call fiat proxies or IOUs that you could invest in to get Bitcoin exposure. The most popular one is GBTC, Grayscale Bitcoin Trust. There's a lot of issues with that. You're relying on Grayscale. You're paying a large fee to do so, et cetera, et cetera. You could buy a Bitcoin miner stock. Those are just really leveraged plays on Bitcoin that are way more boom bust than Bitcoin itself. And again, counterparty, third-party risk. So Isaiah and I are of the belief that, if you have to sort of dip the toes of clients into Bitcoin, then maybe, a very small allocation to a mining stock makes sense. But in order to do it in the best way possible, it's helping clients buy the actual thing, buy spot Bitcoin, and take self-custody of it, hold it yourself without relying on anybody else to do it for you. That's the best way to introduce Bitcoin into a portfolio, but it does take time.
Yeah, and I would build on that of just like why, right? Most advisors, stocks and bonds work. And I've heard this argument before, like my client can do everything they want to do with stocks and bonds. So why the heck do I introduce something different? And maybe this is for an older client. You could say like, hey, clients over the age of insert whatever age you want here don't need Bitcoin. And I would push back on that again, because a little bit of Bitcoin goes a long way. And if they're already okay, this can ensure that if we see an event happen that maybe you don't believe ever really happens, but it does help protect the purchasing power of those individuals. I think ultimately that's what Bitcoin does. And so if you have a goal that is a longer term goal, so I'm not talking about, hey, I want to buy a home in 12 months. Hey, I'm trying to save up for this thing for 10 years. I want to buy, a ski house in Colorado for 10 years. What's the best tool to save for that? It's Bitcoin. Try saving in the S&P 500 versus Bitcoin over the next 10 years. And I will tell you, the ski house in Colorado will be a lot easier for that client to purchase saving in Bitcoin. How do I pay for my student loan tax bomb that I have? I'm working with clients. They have student loan tax bombs. They're a doctor. They're young. They're going to save in this asset for a long time. The volatility is okay when you're saving into it over time. And most clients in the accumulation phase, they're going to save into stocks, bonds, whatever right now anyways over time. And so if you DCA into Bitcoin, it still works really, really well. I think it's actually the best way to do it is buy a small amount, save into it from there. Because like Trent said, you can't borrow the conviction that he and I have. I think that's a dangerous thing. If an advisor gets really excited about this, they think about, oh my gosh, this Bitcoin thing solves all the world's problems, right? Like Bitcoin fixes it. Temper that for a second and make sure that you understand that your clients need that education as well. And as Trent talked about, the idea of self-custody is massive. And I think that's another way to build that relationship with the client, of educating them on how to do it and teaching them and explaining it. It's sticky, but you're helping them actually take self-custody of it. You build a huge bond there because they are learning something new, and you're helping them because ultimately they're hitting the goals and stuff that you've outlined and articulated with them. So to me, like, Bitcoin solves so many things that advisors want. And there's certain advisors that AUM's great, AUM's bad. Like, I don't try. It doesn't matter whether you manage assets or not. Bitcoin helps solve for things. And if you look, in the example that I always try to give is, if I was saving for a house in dollars, it's gotten a heck of a lot more expensive since 2015. If I'm saving for a house in Bitcoin, it's half as expensive. It was 32 Bitcoin for a new median house in the United States. It's now 16 Bitcoin. That helps achieve goals by making savings easier. So that's the way that I would talk about it with clients is longer term goals. Bitcoin fits really well with that. Shorter term goals, use traditional assets, use cash, heck, you can make 5% by just parking cash today. So take advantage of those things. It's not all or none.
Yeah.
I'm sure it changed it. Oh, go ahead, Trent.
I was just going to say, it's sort of funny how many advisors and planners literally make fun of me or dunk on me because Bitcoin is down right now. It's like, yeah, we're in a bear market. Did you not hear me say that I first bought this in 2016 when it was $1,000 and it's 27,000 now? Number one. And then number two, it's like, you are a financial planner. Like, you stress to hold your assets for the long term. That's the only way financial plans ever work, is if you have a long-term time horizon. So go ahead, make your jokes now. Yes, Bitcoin's down. Yes, I was touting it at its high at 69,000. You got me. Let's talk again in 10 years and we'll see who's laughing at that point.
Well, I think you bring up a good point that you did earlier in terms of you don't necessarily need to integrate Bitcoin into your clients' portfolios, but and I don't know this as fact, but I trust that you guys are sharing accurate information. But if Bitcoin has been the highest performing asset over the last 14 years, I agree. You have a fiduciary responsibility to, at the very least, educate yourself and form an educated opinion. And based on that opinion, bring it up with your clients or not, depending on how that, what your thoughts are on that. So I do think that there's a fiduciary responsibility to bring it up. And that kind of leads me to, because I feel like we could talk for days about this, because I have a lot of questions. But if I'm an advisor, right, and I'm like, all right, cool, I do want to be a true fiduciary and at least learn about this. There's so many different outlets, ranging from books to podcasts to conferences to Twitter to all these different places. You don't know if you're chatting with someone who's 13 years old or someone who has been around since Bitcoin's been around. So as a way to solve that, you guys collaborated, correct, on putting together a CE course specifically for Bitcoin. Can you guys talk about that, please?
Yeah. So you brought up a really interesting point, that there are so many sources of education out there, but at the same time, there's no guidance from FINRA or the CFP board or anything that says, hey, here's what you should like learn. Here's what you should pay attention to. And so that makes it really difficult because, like you said, you don't know who to trust. And that's exactly why we built Advice on Bitcoin. Advice on Bitcoin, it is 8 hours of CFP, CE, continuing education. And it takes you from a very first principles look at what Bitcoin is, all the way through the sort of like shiny toys of what we call the Lightning Network, which is an L2, layer 2 built on top of Bitcoin that will help enable a bunch of these other shiny toys that are actually worthwhile on other altcoins, etc. So, I mean, we take you through what is money and like what people have used as money for thousands of years, what traits we look for in a money. We go through an introduction to Bitcoin, just very basic introduction to it. Talk about Bitcoin mining. We talk about the investment thesis, talk about incorporating it into your business, your practice as a financial advisor. And along the way, like, we're not just preaching at you the whole time. We're sending you people to follow on Twitter. We're sending you Twitter threads. We're sending you podcasts, blog posts, all this stuff. And then my favorite part is there's an optional task for each module as well. So not only are you just conceptualizing this, like, we're actually encouraging you to use Bitcoin, buy it, send it to yourself, hold it custody, pay a Lightning invoice, pay an invoice with this Bitcoin. So many different things to actually use it. You know, some people will say Bitcoin is just a speculative tool. It doesn't actually do anything. I use Bitcoin every single day. Millions of people are using Bitcoin every single day, not just here in the US either, but millions of people in Africa and Asia, in Latin America, they are actually transacting with Bitcoin, doing other things with it. So that's sort of like what our course is in a nutshell. It's tailored specifically for advisors and how you can have these clients or have these conversations with your clients.
Which I think is much needed because there isn't really anything else out there that is, to your point, specifically geared towards clients, towards advisors. So they need to sort of discern all that information and filter it in such a way to have it make sense to them and then translate that to the client. So if it's advisor facing, it shortens that learning curve quite a bit, I would imagine.
Yeah, definitely.
That's the
And
goal.
yeah, it's like I said earlier, like, you're drinking from a fire hose with everything else, and then add crypto on top of that. And we're just trying to cut through as much noise as humanly possible to give you exactly what you need in the most efficient way, so that you can actually be knowledgeable about Bitcoin. And if you still hate Bitcoin after that, well, then at the very least, you're educated and you can talk your clients out of it if you really want to later on. But we have a really, really good feeling that that's not going to be the case.
And you get some CE credits, worst case. But Isaiah, you were going to say.
Yeah. And one of the things that we made intentional is there's a couple other, what I will call like digital assets or crypto, like CE courses that folks have put out there. And we wanted to make this different. So the goal is not to monetize for a designation. I am one that I think the CFP obviously holds a lot of weight. People get that. But there's so many advisor designations. Let's be real. So many clients are like, okay, there's all these letters after your name. Like, what the hell is this?
Alphabet soup.
Yeah, alphabet soup. So we're not trying to do that. We're not trying to monetize advisors. And so we say that we're very clear. The goal is education. We want you to be better for your clients, period. End of story. And one thing that I share throughout the course is we had an SEC audit last year. We've recommended Bitcoin and we talked to the SEC. And you know what? The SEC was not like, oh my gosh, we're going to shut down your business because you talked about Bitcoin. Shocker. But like, that is what happened. And so we're still trying to give you like real world, what is Bitcoin, how to interact with it, how to talk about it. And I think one thing that's majorly missed is a lot of advisors have a lot of small business clients that would love to learn more about this from a business case as well. So there's a module on small business and Bitcoin and like how they can integrate it to attract all these crazy Bitcoin people that may want to come and spend money with them, right? And how they can accept it and actually save money, build marketing, grow. And I've seen that, right? As an advisory firm, just willing to talk about Bitcoin and being open to it. We've gotten clients because of that. And people will maybe laugh, but there's been 2 clients that have a lot of Bitcoin that are baby boomers that have sought out our firm, which is not dedicated to that niche, but it was the Bitcoin knowledge that they wanted to come and work with us and talk to us about it. And so I look at it like incentives drive the world. And so as an advisor, if I can be different and have a knowledge that people are looking for, I make myself different, and we want that to be the case. I don't want to be the advisor that is the one that everyone knows is the Bitcoin person, because eventually everyone's going to talk about Bitcoin. So like, just be earlier to that adoption cycle. And I think it'll be good for your clients. Ultimately, it'll be good for your business. And that is a pretty cool thing. And yeah, CE, we know that at the end of the year, everyone's scrambling for stuff and it's boring. So it's like, hey, this can be interesting and you get something out of it. So like, that's a win-win.
That's cool. So before we start to wrap up, let's pause just because we are on the topic of CEs, and I'll make sure to bring this up at the end as well. But where do I find access to the CE course?
It is on adviceonbitcoin.com. And for any listener, we'll share a code for MFA, which will give you a 15% discount for anyone that wants it. If you listen this far into the show and you've heard Trent and I ramble about Bitcoin, you deserve that. So we want anyone that's listened to the show, and we'll make sure that's given to you and it's in the show notes. We'll send you links and all that stuff as well. But yeah, it's there. And the goal is it's leading with education. So adviceonbitcoin.com.
Awesome. So as I mentioned, in our intro call, and for those of you who are listening, one of the things that I do with all of our guests is ask a book that's had an impact on them as a way to distill a reading list for all the folks listening to the show. So I'm curious to know about the books that have had an impact on you. And Isaiah, you chose the Bitcoin Standard, very fitting based on this conversation. But why did you pick that? What's the impact that it's had on you, and why should people check it out?
Yeah, so I think this is an evergreen book that people can look back on as being a foundational, fundamental change. And so reading it for me late 2019, it basically articulates and walks through how Bitcoin is such an upgrade to money, and like what money historically has been, and what are some of the issues that's happened over time, and how has that changed. And so the Bitcoin Standard just outlines and makes the case for the impact that money has in society, and how when you have good money, a lot of things happen that are positive for human flourishing. And when you corrupt the money, it goes the other way. And you've seen examples of that historically over and over again. And so this idea of, fix the money, fix the world is a kind of a Bitcoin-ism. It comes a little bit from that idea of when historically there's been these great abilities for humanity to take giant steps forward. It's been because the money has been sound and good and not manipulated. And I think Saifedean Ammous does an awesome job in the book of articulating that.
Awesome. And then Trent, you chose the Almanac of Naval, I believe is the pronunciation.
Yep.
I've never heard of that book before, nor is the title as obvious as the Bitcoin Standard. So I have no idea what this is.
Yeah. So Naval Ravikant, he is a former tech VC. So that's sort of how he made his name, was investing in tech companies such as Twitter and Uber and a handful of other ones. And he also created AngelList, which is how you can invest in private companies as a VC, or even as an unaccredited investor in other smaller deals. And this book is sort of cheating in a way, because it's not really like a book that you read start to finish. It's a book that you can pick up and read a passage and put it down for a month and then pick it back up later. It's sort of like Meditations by Marcus Aurelius. So it was authored by Eric Jorgensen, and it's basically just Eric taking a bunch of content that Naval has put out there from tweets and podcasts and blog posts that he's written, and he's just condensed it into this book. And it's separated in two areas, happiness and wealth. And it's just sort of looking at how he's been able to build both of them throughout his life. And it's just like Naval is a very first principled thinker. He looks to what is true, and then he builds his life based on that. And if I could have dinner with anyone in the world, it would be Naval. And I think that there's just a bunch of really golden nuggets of wisdom in there, which is why I like it so much.
Awesome. Well, I appreciate you guys sharing that. And I know you guys are both big on Twitter. I actually think that's how you two met originally, if I'm not mistaken. So where can folks find you? So obviously, and I have the website up here, adviceonbitcoin.com. And so that's one place they can go. Where else can they go to connect with you guys, Trent?
Yeah, definitely primarily on Twitter. It is how Isaiah and I met probably 2 years ago. We have a actual financial advisor group that loves Bitcoin, talks about Bitcoin, incorporates it into our client conversations. So we have this group that sort of collaborates all the time. But yeah, I'm on Twitter at _T Dudenhoeffer. Also on LinkedIn, a good amount. There's a lot of good content on LinkedIn. A lot of good conversations are happening there. And I'm trying to put more Bitcoin content just sort of like dripping on people as the days go by. So Twitter and LinkedIn for me.
Yeah, good luck
Isaiah.
spelling Trent's last name, right? So
No,
hard.
yeah, go look at the show notes. I think the social handles will be linked there.
It's funny. I actually like would spell it out in previous podcasts, and I'm just like, yeah, whatever. It's always in the show notes.
Yeah, mine's a little easier. It's at ID Financial on Twitter, and then Isaiah Douglas on LinkedIn. Similar to Trent. And yeah, so Trent and I've never met. Twitter's been great for that. It can be a place where it can be a time suck or it can be a real benefit, and it's one of the cool
You guys
things.
have never met
We've
in
never met in
person?
person. Nope, never met in
No,
person.
And Trent, you said Kansas, right?
Kansas City, but
Kansas
Missouri. I'm
City.
on the good
Oh yeah,
side.
Missouri. And then Isaiah, you're are you in like Indiana or something?
I'm in Indiana. Yep. So I'm in Noblesville, Indiana, a suburb of Indianapolis. So right
All
there,
right,
smack dab in the middle.
cool.
Yep.
Well, sell some of your Bitcoin and hop on a plane and get together.
We've joked about it. We're gonna get together. We have talked about it. We're gonna get together before the end of the year. So
Yeah.
Well, especially whether it's, just, hanging out or, finding a conference where there's common ground, with crypto or, otherwise. But yeah, it's funny. I went to a conference a couple weeks ago in Scottsdale, and there was three people who I've only ever known either through social media or on Zoom calls like this that happened to be there. And I was like, this is so weird, but also nice to like actually meet in person after knowing each other for like 4 or 5 years. So
Yeah.
definitely bridge the gap and get together in person.
It's crazy. Like social media was built to network, social networking. And I've used social media for 10 plus years and I've never actually used it for networking until very recently. And it's super, super powerful.
It
I
really
was
is.
missing out.
Love it. Well, Trent, Isaiah, I appreciate you both joining the show. This was very insightful for me. Hopefully, it was insightful for the folks listening. And I'm appreciative not only of your time, but the time spent putting together the CE course as well, because I think if advisors, I would imagine there's a lot of advisors out there that are open to and curious about learning, but they have no idea where to start. So if they can get credits for this, CE credits as well, and learn about the topic, adoption will only increase. So appreciate the time spent putting that together as well.
Yeah, definitely. Can't thank you enough for having
Thank you,
us.
David.
This was a blast.
Of course.
Yeah, appreciate it.
Appreciate it. Take care.
Thanks, David.